What's up, YouTube? It's your boy Tony Swedberg, and today we're doing Car Salesman Explains Interest Rates on Car Loans Perfectly. So if you're looking for a car and you want a lot of knowledge on interest rates, or you're a car salesman and you want to learn how to overcome objections, this video is for you. Make sure to watch until the end. So first question I want to ask you guys is, what is the interest rate based off of? Now, most people are going to say credit, but there's a lot of other factors that go into the interest rate. I had a 680 credit score come in. She got a pre-owned vehicle. She was upside down in her car, and going into the pre-owned vehicle, her interest rate was like 17%. Now, she was upside down, so rolling over money, the bank valued the car around $20,000. Out the door, she was at like $30,000. So it's very high risk when you owe a lot more on the car than what it's worth. The reason why, and it goes back to, why is it so easy for someone to get approved on a car, but they can't get a $1,000 credit card? It's because the bank has something to take back. So they can take the car back as a repo, and that's their collateral. Like, they can always come pick up the car. And that's why it's easier to get approved on a car over getting approved on a credit card, because of that collateral. So what I did is I switched her to a new vehicle. What that did is the car was valued at the invoice price, MSRP, but invoice is like pretty close. It's a little bit less than the MSRP of the car. So after that, we had discounts and rebates, and then we added in the negative equity, but those discounts and rebates offset it. So the starting price was like 30 out the door after, negative equity, but the discounts and rebates were really high. She was at like 29. So the bank saw the car was worth around 30, and out the door, she was like, I believe it was like 28 or 29. So that's a really good loan to value. They're like, okay, she owes 28, 29, and the car's worth 30. So there's not a lot of risk. And that's what the interest rate's based off of. Not only credit, but also risk. And that's not the only situation. I had a 677 I sold a car to yesterday, and she ended up getting an 11% interest rate at 75 payments. And at a 677, she can do a lot better than that, but it was high risk because she had 4 open auto loans, a couple under her name, but some were co-signed, maybe 1 under her name and then 3 co-signed because she had like 4 kids. And that created high risk. Adding a 5th one, the risk was higher, so the interest rate was higher. So if you're liking the video so far, make sure to hit that thumbs up button, but more importantly, hit subscribe. Almost at 10,000 subscribers. Very excited for that. But if you have any questions, please, in the comment section, please ask the question. I will get to it and answer your question. So I'm a car salesman in the internet department. I constantly hear people on the phone talking about interest rates. Maybe the customer, like today, was 2.99 they were getting, and they have to finance with us to get the online price, and our rate, I believe, was like 3.75. Now, how you're going to explain that? First off, on a $30,000 car, the difference between 1% interest is around $1,000, sometimes a little bit less, depending on the price of the car. So it's not a huge thing. It's just the 2.99 definitely sounds good to the customer, and that's like what they want. They want the best everything. Now, you have to make them feel better. So to overcome this is very easy. You have to explain that the online price, or the price you're giving them if they're at the dealership, is very ugly. The reason why you have to finance through us, because that credit that you're giving your bank that gives you 2.99, they get the credit, and we need that price for the price that we're giving you to make sense. When we sell you the car for less than what we own it for, we have to get that credit to make the deal happen. So that way you save all the money up front. And the good thing is you only have to stay with any of our lenders that we have here. We have 40 different lenders, and all of them you can refinance after only 3 months. And just 3 months of making those payments, it's only around, $10, $15 of interest each payment. But that way you're going to save thousands or hundreds up front. That way you get the best price up front, but you also get the interest rate that you're looking for. And when you don't really push it hard, and try to convince them they're buying it or it's a good deal, and you just throw in, we're selling you the car for less than what we own it for, they pick up on that. You don't push it, but you just say it, and they pick up on that. And that's really how you can build value in the price as well. And the last tip, I hear this all the time, anybody who's trading in a car, on average, people trade it in after 2-3 years, let's say. Anybody who got a car back then, the interest rates were way lower. I always explain, yeah, I mean, they'll say, yeah, I got 2.99 and, you know, now you're at 4.99. And I'll explain, yeah, back then, you know, I got 1.99 on my Mercedes. It was even pre-owned. But those rates don't exist anymore. The lowest I've seen is, you know, 3.75, and that was with an 850 credit score. Let's say they're in the 700s and they're at 4.99. That will just justify the interest rate a little bit for them. So I hope you guys enjoyed the video. Comment down below if you have any questions, something I didn't touch up on, and make sure to hit that subscribe button and share this video with somebody who is trying to get the best interest rate. And until next time.